Welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited. And as I speak to all of you all this Monday morning at around about 10:30, markets are holding out in the green, but there has been some amount of lower levels from the levels that we've seen in the first part of the morning. Expect the choppiness and volatility to continue. 6th, that is Wednesday, 6th of August, we have the credit policy. Expectation of rate cuts is virtually zero, but I think on fallback of the tariff-related news flows, the commentary from the RBI governor will be something that will be keenly watched out for and listened into by the market participants. Will there be any kind of major negative or an overhang on the GDP growth or the overall economy is something that the market participants will be willingly wanting to eager to listen into the RBI governor. And of course, on the first quarter earnings, well, the first half of the first quarter earnings that we've seen so far was a little bit disappointment. Expect the second half to be a shade and a color better than what we've seen in the first half, which will possibly help the market to improve the sentiments in terms of the correction that we've seen, because last 10 days there has been continuous selling from the FIs and equally or more amount of buying side activity from the domestic institutions. We are very close to certain crucial levels, friends. 24,500, a break below this could send us further down to 24,200 to 24,000. Prudent to see if we are able to keep our head above this 24,500. And if we are able to do that, then 24,700 to 24,800. So that's the broad range of the market. If we are able to hold out 24,500, then 24,700 to 24,800. And if we give a decisive close below 24,500, then 24,200 to 24,000. But our sense is that the market would possibly be able to withstand and keep its head above 24,500. And that's one of the primary reasons is the earnings season. We expect the remainder half of the first quarter earnings this new financial year to be supportive to the markets. On the volatility front, well, India VIX has inched up a little bit more than what we've seen last week. 12.39 is the level of India VIX with a bump up of about 3.84%. Uncertainty and volatility will keep India VIX above, but I think the level where India VIX is trading, it's not very well elevated compared to what we've seen of 1820 plus India VIX. We are much lower. Brent and NYMEX crude oil both are down this morning. $69.45 to a barrel is Brent and $67.17 to a barrel is NYMEX. Expect lower levels to come through. On the rupee dollar equation, we've seen an ugly bump up on the rupee post the announcement from the US president. But this morning, there has been strength in the rupee, $87.36, 87.36 rupees to $1. There is a strength of 0.18 paise on the rupee against the dollar. So we would possibly see levels of 87.15 on the lower level this week is the likely possibility. This choppiness and volatility, I think as we are progressing further, the tariff related negative impact is also getting lower. Now it remains to be seen how the counterparts of both the countries are able to meet up and come to a common point of understanding, which will turn out to be a win-win situation for both, but that only time will tell. So external shocks in terms of statements, etc., will be there as far as the global markets are concerned and will also follow the suit. Monsoon coverage has been decent. More and more positivity in terms of a strong agri output. And if that happens, then I think we are likely possibly to see lower levels as far as the food inflation is concerned. But yes, there are certain crucial events to unfold which will possibly guide us towards a more stable market. My point, friends, is that we need to see stability in the market. Rather than a sell-off or a sell-out or a buyout, we need to see some positivity as far as the market is concerned in terms of stability. Once the stability is in place, I think then we can expect some kind of upward move. So don't expect any kind of, stock specific on earnings related, you will see stock specific moves. But my understanding is the market should stabilize over here rather than give you a run up or a run down. I think that would not be something prudent to expect. So as always, friends, we give you two investment ideas. One from pharma we have this morning and one from infrastructure space. A small to mid cap pharma company which has been a stellar wealth creator since the time it got listed is Mankind Pharma. A diversified product profile, great market share, and new launches to drive the earnings visibility. And this is one particular pharma stock which will possibly stay a little bit isolated from external shocks, external news shocks. And in terms of growth trajectory, we expect new launches to drive the top line. And of course, high-end margin products will give support to the profitability, that is bottom line. So the first investment idea is Mankind Pharma. The second one is from the infrastructure space. Again, this is also one sector which is relatively away from the external shocks, news flows. Infrastructure space related investment idea is NCC Limited. This company used to be known as Nagarjuna Construction Company Limited. Now it is known as NCC Limited. Good order book, good execution, and I think fast lane approvals is likely to drive the order book to a next level. Company is equally capable of executing its order book at ground level and thereby translating that into top line and profitability. Where the stock is trading both Mankind Pharma and NCC Limited, we expect the downside to be limited. Risk reward is favoring in case if you have long term investment idea. A small disclosure, friends, for the benefit of everybody, that these investment ideas are from our research team. Our company Geojit or I, we do not have any personal investment in these companies, nor do we have any financial interest, nor any kind of conflict of interest. But we give recommendations to our clients on similar lines. They might hold their long-term investment positions in the stocks that are recommended. One more request, friends, that since we are in uncertain times, start at current levels. Don't wait for timing the market, finding the right value, etc., etc. Start at current levels in a phased out manner as per your risk appetite and your investment time horizon. Start at current levels and gradually add to it on lower levels. So since these are fundamental investment ideas, you need to have longest time horizon, 12 months, 18 months, 24 months plus. These are not BTST, STBT, so please bear that in mind. Thank you for your kind attention and patience hearing. I'll see you again next week. Please, till then, please do take care of yourself. Bye-bye.